we talked, we're focused on the Southeast, but are you seeing a difference? Is it, if you're on the West Coast, if you're in the Valley, is it easier to raise money, harder? Are they saying the same thing? Sean?
Love that.
Is that right?
I'm on a board there. I go every month, and they're like, one thing about the VC funds in the Valley, they're so large that they can close a company down no problem on Monday morning after a board meeting on the weekend, and they'll make that call. So they're much more aggressive, in bailing out and making choices. Certain sectors, I think, are really struggling. A lot of the VCs out there are in semiconductors, and that's a very hard place to be in right now. There's no IPOs that can save those companies. Same with biotech. Usually they're out. There's been IPOs. There's no IPOs to save those companies. So I think that in the Valley they're making some real tough calls as to what companies they're going to back or not back. So and they're just very quick to do that.
Somebody, I guess, Frank, you had mentioned some of the hot areas, but let's talk about that. Where do you see the hottest area of technology, healthcare? Patrick, you want to start on that one? Or?
Yeah, there's hot areas that are defined by popularity of investment very recently, such as clean tech. Clean tech is particularly interesting for a number of reasons. One is that it's this hugely broad category of stuff. People think of solar and biofuels, which is true, but it also includes demand management, transportation, water. So I think the diversity of the sector makes it particularly appealing. It's also at this point in time where you have the convergence of interest from consumers, interest from government, interest from corporations, interest from countries all over the world. And I think those things are all coming together to make investors think that as a class it's very interesting. So, despite all the hype, I think there will be some very good companies that come out of that. There will also be an awful lot that go by the wayside just because there are so many of them. There are also fundamental trends in society that we all know about that are continuing, trends towards mobility, trends towards consumption of content over the internet rather than television and traditional mediums. So, companies that enable those areas are ones that will continue to be interesting. Virtualization is interesting, cloud computing. One thing that we joke a little bit about at the moment is, most entrepreneurs, in fact, I think almost every entrepreneur I meet with thinks that their technology is uniquely suited to take advantage of a downturn in the economy, which can be true for some of them, but certainly, companies that do enable larger corporations to do things more efficiently from an energy perspective, from a money perspective, are things that are going to have long-term value.
I think the other thing you're going to see here is the first time in 20, 30, 40 years, you're going to see the consequences of government action more than we've ever seen before. Different industries are getting whipsawed, both in a positive and a negative direction. If you look at the stimulus package, there's tremendous funding for electronic medical records. And that's going to be the start of another industry that then supports those medical records and making all of the equipment compatible with it. So in that sense, the stimulus package will support it. As Katrin said, anything green, there's tremendous dollars in green spending. And then also, it's unbelievable how many dollars are in that package for rural broadband. This table probably looked at rural broadband 10 years ago, 8 years ago, 6 years ago, and now there's billions and billions and billions of dollars supporting this infrastructure. What's that going to do to some of these companies? Not really clear yet. It's going to impact them. On the negative side, there's going to be actions taken that may crush some industries. So healthcare, like Frank said, right now is very, very hot, very active. Our last investment was a healthcare services company. You keep looking over your shoulder at what Big Brother's going to do to possibly change that in the coming years. So,
but I know I tell my clients that are looking for money that it's a full-time job, and you better have thick skin because you could meet with 100 potential investors before you find one. But the fact is, all you need is that one to get it moving. So, Alan, did you have anything to add in that?
No, I think Steve said well. There's just a ton of people in this room that have referred great deals to us over the years, and so we continue to rely on this group in particular to help us out. And I don't think there's ever been, there has been a ton of dialogue in the Atlanta tech community about sort of bridging have a really good idea, I mean, it seems like all you have to do is put your URL up on Twitter, and you're going to get 8,000 comments on it, and get buzzed or get shot down very quickly. So I've seen more, I think that there's more velocity in that